If we want to trade more accurate and with higher reward to risk ratio, we should know our price range and we should know our premium and discount. And firstly, we should identify our range from the low or the high. That is important. And today we are going to talk about how we can do that and how we can do that in a more graphical way. Hello, how are you? Today we are going to talk about trading ranges and how we can identify and mark them to find best zones that can provide us with high reward to risk ratio and high win rate, and to find our premium and discount. I'm not talking about ranging markets, I'm talking about these shapes, our trading ranges. One of the most important thing about trading ranges is that it keeps us from the dangers is between the ranging markets. For example, here a lot of people are going to lose their money. So the first important thing about these shapes or our trading range is that we can see that the market is ranging from a very powerful and the price action perspective. For example, here we know that if we know what is trading range, we can see that here the market is ranging, so we are in a pullback mode and we don't risk our money. But when the market comes up and breaks the structure, we say that our trading range is from here to here, so anything that is happening between these 2 points is just a pullback. So one important thing about trading ranges, I am going to say that again, it's not ranging market, it's these shapes. About our range of trading is that it can help us to avoid ranging markets and dangerous conditions of the markets. Another very important thing about identifying and marking your trading ranges is that it is a very good measurement tool. I mean that you can mark your trading range for example from here to this high, and you say that it is my trading range, it broke this structure and I want to trade somewhere in this range. And we are going to use Fibonacci tools and other tools that helps us to identify the best zones and the best levels that we can invest on them. For example, a very simple thing is that when you know your trading range, you can say that I'm willing to buy or sell after a 50% retracement. Another important thing that we are going to talk about in the future, we are going to talk about all these concepts in the future again, but anyway, with these corrections, I mean when the market comes up and for example breaks this structure, let me make it a break of structure, with the correction after that or with this correction, we can measure the target of this movement. For example, the market comes up and breaks this structure, then pullbacks and starts to go up. From this point to this point that the pullback is stopped, we can measure this leg, and with that measurement we can measure that the zone or the price that the market is going to hit for the first profit, or if we have some kinds of liquidity zones or supply or demand or support and resistance in the left of the chart, we can say that we have a confluence here, so it is going to be a good zone to sell after this pullback is completed, and we can measure this leg. So another important thing about knowing our trading range is that we can find out where the market is likely to go. The next important thing about marking our range of trading is that we can use that to identify higher lows in uptrends and lower highs in a downtrend. So when the market is trending up, we can mark our range of trading like this, and we can wait until the market pullbacks comes to discount and hunt the higher lows. It's enough for now. Let's talk about it in details, and after that we can hit the charts. Now let's talk about that how we can identify our trading ranges. We talked about market structure, kinds of market structure breaks, and how we can identify, and even we talk about how we can graphically identify our structural supply and demand, and we are going to talk about that part again. Anyway, but now we want to know our trading range, identify that and mark that on our charts, because it is a very powerful concept and it is going to be a great help for us. This is Leo, your trading companion, and your support, your subscriptions and your likes and comments is going to help me to buy a pillow and a mattress for myself. I think he doesn't allow me to use my pillow again, so thank you for your subscriptions and likes. Let's talk about trading ranges. As you see here, you can identify this structure that got broken. So we want to try to catch buying trades. We want to try to catch higher lows. Why? Because these are more probable in the markets and they are going to provide us with higher reward to risk ratio than start to selling, for example, this high, or start to buy this breakout. Those are the ways that retail traders trade. Or I don't want to say I'm a smart money trader. No, I'm a retail trader as well, like you. But anyway, it is more advanced to try to take these trades instead of these kinds of breakouts, because some of them, most of the times, are going to fail, or they are going to hit your stop loss and then start to move higher. So we want to take these higher lows. But how we can do that? First, we should identify our trading range that we are going to talk about that in this video, and in the future videos we are going to talk about how you can identify the best zone, for example a zone here, and start to take entries here, and how you can trade entries. We are going to talk about that as well. So what is our trading range? When we have a break of structure, we can say that so our structure got broken and we want to catch these higher lows. We have a protected structure and a targeted structure. Our protected structure is this low. Which low? The low that broke the high. So the low that broke the high is going to be our protected structure. Or the structure that broke another structure, the opposite structure, is going to be protected, and the structure that didn't do anything is going to be our targeted structure. What I mean? I mean that we assume that this low doesn't get broken, and what is the market doing here in any shapes, it's just a pullback phase, and we assume that this high, which is targeted, is going to be our first target or take profit. So we assume that the low that broke the high is protected, and the high that didn't do anything is going to be a liquidity point and get liquidated. The point from here to here is our trading range. So we want to identify this from the low that broke the structure to the high that started to pull back. Let's see some simple examples and then hit the charts. Here you can see that the market broke this structure, so it is going to be our protected leg or our trading range. Again, it broke this structure, it is going to be our protected leg, and again and again. And when this high comes and breaks this low, we can say that it is a break of structure, so it is our protected leg or our trading range. So what is the benefit of these markups? You are going to wait until it starts to pull back and try to catch lower highs. So after that we can say that it is our leg, and it is our leg, and it is our leg. But the market doesn't move this simple, does it? So why is benefit of these things that we are doing? When the market breaks a structure, for example like here, and we can identify our leg, that is going to be this leg or our trading range or our protected leg. After that, anything that market is doing between these 2 points is going to be just a pullback. Market sometimes do things like this, but at the first glance, before the market comes and break this structure, we can say that anything that is happening in this range from this point to this point is just a pullback phase, and the market is likely to continue its movement. Let's talk about this concept on charts. It's so messier than I taught you, right? But it's simple. Let's talk about this on charts. So we are talking about trading ranges. We want to identify our range, we want to mark that range, and we want to use that range in the near future. So what we have here, it is a ranging market in my opinion. Why? Because our protected high is here and our targeted low is here. We don't have any other structure in this box, do we? So the only good and important structures that got broken is here and here. So we have two protected highs, one is here and one is here. So this leg and this leg is our protected leg or protected structure. So the important thing is that we should wait until this or this gets broken to start to buy the market. If for example we have a very important POI here or some important news came out. But before that we should just try to catch lower highs or try to catch selling setups. Let me clean the chart. You can see that we have our leg here. So from this point to this point, it is our supply range. So when the market comes up and hits something here, we can say that, oh, we can trade this high for selling trades. And again, this leg is our protected leg or our supply range. So we can start to think that the market may go lower. So this is a good opportunity and this is a good opportunity as well. You may think, oh, it is not a good trade from here to here, but when we are going to talk about fractals and entries in the market, you can see that how powerful these setups are, and you can take some 4-to-1 reward to risk ratio, 5-to-1 reward to risk ratio trades from here to here. But anyway, when we are going to start to take buying trades, if you want to be a little more aggressive, you can say that here we have a break of structure and that is legit too, and here is another structure. So when the market is breaking a structure to the upward, we mark our low that broke the structure to the high that started the pullback. So it is our demand leg, and in the discount of this leg that we are going to talk about, you can take this higher low, and again it broke this high. So from this point to the high that started the pullback is our demand range. Again, our demand range. It is a grab of liquidity. We can extend this box to here, or we can say that this box gave us a trade here, but the market didn't hit its discount. It hit it here. It is an opportunity. But anyway, we have a supply leg here as well, from here to here, and you can catch this trade as well, but you should manage it well because our context is bullish. And in a higher time frames, you should have my eyes to see that, but in a higher time frame, this leg is a protected leg as well. Let me show you. Where was that? You can see that it is a protected leg. Why? Because we have this break of structure here, and this is a leg itself, and we can take the trades from this point for higher lows. Again, it broke the structure. It is daily, so it is cleaner. And when I say that sometimes the pullbacks are complex and you may get confused, is something like this. You can see that it came up, it came down, it came up, it came down, it came up, it came down, but anything happens in this leg is just a pullback, and it is likely to go higher. I think it is enough for today. So how we can identify our trading range? When we have our primary structure, for example from here to here, we wait until this high or this low gets broken. For example, it came down and it broke this low. Then this is our protected leg. So the market comes up, comes down, comes up, comes down. Anything the market is doing from this point to this point is a pullback phase, so we can try to catch these lower highs. It sometimes simply comes up, hits something, and it goes down, and sometimes it is going to be a little bit messier or Ronaldier, I don't know. Anyway, so sometimes it's simple and sometimes it's messy, but anyway, you can think that this high is going to be protected and this is just a pullback phase. In the future videos, we are going to talk about premium discount, and in the medium term or far futures, we are going to talk about a lot of things like order blocks, how to identify our zones, what is liquidity, how to use that, and you are going to have your own trading strategy for free with this channel. We are in dark times in my country, in Iran. We don't have internet connection, good internet connection for trading, so your help in these times is much appreciated. Thank you for your watching, and if you have any kind of question, you can ask in the below. Thank you and goodbye.